Hi everyone, and welcome to Wall Street Multimedia's Market Watch. I'm Tiffany Liu, bringing you the latest market news. On Wednesday, U.S. stocks traded choppy before settling higher following a policy statement from the Fed that left its rate hike timeline unclear. It cited continued gains in the job market and will remain data dependent. On Thursday, the U.S. market moved lower after the latest reading on GDP showed a 2.3% annual rate expansion. This could keep the Fed on track to raise interest rates by September. However, some say the figure is not as important as other factors like inflation and unemployment levels. Meanwhile, disappointing results from Facebook, Procter & Gamble, and Whole Foods contributed to a continuing lackluster earnings season. What effect could the Fed rate hike timeline have on U.S. markets? Which sectors are most affected in the midst of this disappointing earnings season, and how will stocks perform in the near future? Let's turn to Peter Costa for the answers to these questions. So what are your thoughts on today's second quarter GDP data? Will it have any effect on the timeline of the Fed rate hike? And has the market already priced in this possibility, or could the uncertainty of the timeline upset the market later?
Well, first off, I was as far as the GDP is concerned, it's a little disconcerting because I think we were expecting a little bit higher number, but these things get revised, and I do feel that at some point in the next month or so you'll see it revised upward. It does definitely, if it was higher, the Fed would be more inclined to hike rates sooner. But since, it seems like there's lackluster growth, the Fed really, if they look at that and that's one of the predominant data points, they're not going to raise rates in September with that number. But I do think that will be upgraded, and I do think you're going to see the Fed get a little more aggressive. But Fed rate hikes I think is more contingent on wages. If we start seeing wage growth accelerate, I think that's where the Fed will act very quickly.
A lackluster earnings season seems to be driving U.S. markets down. Which sectors have been affected the most, and are there any other major market movers at the moment?
Well, it's been technology. You've seen technology stocks get slammed if their earnings didn't come in where the analysts expected them, and I think that's going to continue. It's a volatile sector to start off with, and it was also very highly priced. So the movements are going to be moves are going to be a lot larger, coming from a much higher level. The financials are the one you really want to watch, though. I think the financials did okay. I think their earnings came in all right. They've acted okay, and they are market leaders. So I think where the financials go, the market's going to go.
U.S. consumer confidence fell to its lowest in 5 months last week. Do you think this will reflect in investor sentiment, and how will the U.S. stocks perform going forward?
Well, potentially, having consumer confidence, down again, I think that could be a big negative on the market. But we've seen it before, and the market hasn't really reacted negatively towards that. And a big part of the U.S. economy is consumer spending, and if the consumers aren't ready to spend, whatever growth we're looking for, we're not going to get for a while. So, yeah, it can definitely impact the market. I think that's short term, though. I think that once you start getting into September, October, people will start feeling a little more confident in their situations. Getting towards the end of the year, start spending a little more money. I think things will pick up going into the third and fourth quarter.
That's it for today's episode. I'm Tiffany Liu, and thanks for watching Market Watch. I'll see you again next time.